Good evening, everyone. Time for another silver update. This is the 30-minute chart of silver provided by netdania.com. You can click on the link below. And as you can see here, we are correcting back from that near 32 level, 30, 31. This is where we're meeting. I'll show you when we get out to the daily, where we're meeting that resistance trend line. And we're sort of rolling over here to the downside. Now, one of the encouraging things about this is that, as I pointed out in previous videos, that we're beginning to enter into a bull market phase. And this is indicated by the MACD indicator. So you can see you get a buy signal right here at this point, and we have another buy signal here. We had a buy signal there. So you can see this is a very valid buy signal. And this one is still a valid buy signal. We're still above it. Whereas the sell signals, you can see there's a sell signal there, and we were basically flat. There was a sell signal there, immediate failure. Another sell signal here, immediate failure. Another sell signal here, and again, complete failure of that signal. So that's going to be an indication that we are beginning to roll up to the bull market phase of this. Now, could we correct here? Yes, we could, but I would like to point out that we are already coming very close to an oversold condition. That's with very little price correction, but significant correction in the MACD. That's the sort of thing that you see when you're rolling up into a bull phase. The buy indicators start to be very valid. The sell indicators become completely invalid. So the sell indicator that we're watching very carefully is this one here. It is currently valid, and we're actually getting a decent decline. Now, the decline is not taking us at this point below the support of this last rally, but we're getting close. So this is a key decision point here if we're going to turn and rally up and break through a lot of resistance, or if we're going to roll over and begin to get valid sell signals and invalid buy signals. So a very critical week in the price of silver here. Technically, we need to watch this very closely and see what it does. Now, on to the main story of the night. I'm going to spend quite a bit of time on this story because it's one that just comes up very frequently. I'm going to start out with the announcement. This was covered by Silver Doctors, and this is the announcement that China is going to spend 800 billion pounds of stimulus. I think that's trillion something, but as we get down to the meat of the article, we'll see that there's actually quite a bit more stimulus going to be going on as well. And it says China has announced a total of 8 trillion yuan, or 800 billion pounds of stimulus projects to try to boost confidence in an economy that appears to be cooling faster than expected. Now, remember this phrase, cooling. Cooling simply means that it's not as hot. One Chinese province after another has stepped forward over the last fortnight to announce their plans in what appears to be a propaganda effort to reassure the public that the economy is still on track. Meanwhile, Wen Jiabao, the Chinese premier, promised over the weekend that the Chinese government would intensify its efforts to boost the economy in the second half of the year. On a visit to Guangdong province, the heartland of China's export industry, Mr. Wen warned that there will still be a lot of problems and uncertainties in exports going forward. The third quarter is a crucial period. Analysts said the government could now steer the value of the yuan lower after a gain of 4.7% last year against the dollar. Further export tax rebates could also be used to bail out manufacturers. China's export sector is suffering from anemic demand from Europe and the United States. So we're told here that we have anemic demand, which is barely positive, one would assume from that. But let's look at the numbers. In the first 7 months, exports rose 7.8%, while imports rose 6.4%. So exports are growing, and they're growing significantly faster than imports, leaving China in danger of missing its 10% target for trade growth this year. Oh, heavens no. That's a terrible recession coming if they don't make that 10% figure. July's exports grew at the lowest pace since 2009. That's in bold. And there are reports of factory workers leaving and returning to their home provinces for the first time since the financial crisis. So it's a financial crisis when we only grow 7.8%. The Telegraph has traveled to the south of China over recent days to witness a slowdown in the coastal economy and the export sector, also areas which are flourishing, and also to areas which are flourishing with new investment and where the local economy is booming. The picture appears mixed. China, geographically almost the same size as the Eurozone, appears to be struggling in some areas and flourishing in others. A new inland corridor running from Liaoning in the north to Guizhou in the south through cities such as Wuhan and Changsha is booming. In response, Guangdong has unveiled 177 core projects worth 1 trillion yuan. Okay, that's one province, joining a long list of local governments to announce stimulus plans. The huge cities of Chongqing and Tianjin, meanwhile, both said they would spend 1.5 trillion. Okay, these are cities, and they're talking about spending 1.5 trillion yuan. I think the ratio is 6 to 1. Let's just say 6 to 1. So this is going to be a $250 billion worth of spending. Now, compare this to your bankrupt municipalities and bankrupt cities in America. It's just it's absurd. Well, Guizhou, one of China's poorest provinces, has said it will spend 3 trillion yuan on ecotourism, creating a series of national parks. The central government, meanwhile, said it would spend to plow 2.4 trillion yuan into reducing carbon emissions and energy conservation programs over the next 3 years. Boy, that looks like a real slowdown. And has already set aside 26 billion yuan in subsidies to encourage consumers to switch to low energy appliances. The roll call of announcements may be a signal that after half a year of fine-tuning monetary policy, the government is preparing to take more drastic measures. While the Communist Party has penciled in a slower growth of 7.5% for this year in order to restructure and rebalance the economy, there are indications that China may suffer, and may already have suffered, a hard landing where growth would fall below 7%. So that's a hard landing when you're talking about China. If we saw growth of 7% in the United States, people wouldn't even know what to do with the news. They're so busy cooking the books. You see story after story about how, well, the recovery's not doing so well. I thought we were already out of the recession in 2009. It's just absolutely ridiculous to compare these numbers. The United States would be lucky to have 1/4 of 7% growth in the next 10 years. So it's just absurd. Quote, a hard landing in China would look like the fourth quarter of 2008 and the first quarter of 2009 when exports collapsed. Factories had no orders and migrant workers were laid off by the tens of millions, says Wang Tao, an economist at UBS, of course. Mr. Wen said many negative factors would continue to affect stable economic operations in the second half, that the difficulties of boosting growth are still relatively large. Facing the current difficulties, we have to improve the operating environment for companies and enhance the corporate confidence, he said. Many of the new stimulus projects appear to be simply restatements of existing commitments, and there was no indication how they will be funded. However, economists at Barclays Capital said that unlike the boom in infrastructure spending after the financial crisis, the projects are aimed at boosting China's technological capabilities and its domestic consumption. Quote, these plans have a reasonable quality control, they said, and note, adding that whether or not the plans were new or old, bringing them forward would be helpful in offsetting the headwinds from external demand deceleration. That's interesting that the external demand from Europe and America is described as anemic, but China is still growing at a 7+% growth rate. So is this already coming to pass? Several economists remain confident that China will continue its blistering growth for several years to come. Justin Yifu Lin, the former chief economist at the World Bank, predicted that the Chinese economy would continue its high growth rate for another 20 to 30 years. Mr. Wen also said that despite the problems, China's economic fundamentals have not changed. He added, "We have a lot of good conditions and optimistic factors that will help stabilize growth." So there's another Western hit piece against China, which is absolutely crushing the United States as far as economic growth. And of course, their exports continue to grow. Their trade surpluses continue to grow. They have the cash to have real stimulus as opposed to American stimulus, which is fake stimulus from printed money that is borrowed. It can't even be borrowed because no one's willing to lend anymore. It's just printed up, and it's hyperinflationary paper petrodollars. So let's look at some of what China is doing. Now, this is a very famous map of Africa that appeared on Stratfor and is covered at various places, Zero Hedge as well as some other places. And you can see this documents the investments that China is making currently in Africa. You can see by the color codes here, if it's red, it's more than $10 billion in investment, then $5 billion, $1 billion. So you can see significant Chinese investments are going on in Africa. Now you can see by the key here that you have railroads being built, oil and natural gas. That's the primary, of course. Then railroads, then mining. Then we have hydroelectric dams. You can see here's a dam being built in the Congo. Here's a dam being built in Cameroon. We have dams being built in Ethiopia, South Sudan. You can see the incredible amount of Chinese infrastructure building going on in Zambia, Zimbabwe, in South Africa. All over Africa, China is making infrastructure investments. Now, I tried to do a little bit of research on the Chinese dam building, and this is actually an article from the internationalrivers.org. Of course, this is some kind of left-wing environmentalist interest, so they're going to have that slant here, but you can see they actually cover the Chinese dams that are being built. Chinese corporations, financial institutions, and government are involved in billions of dollars worth of large dams in Africa. Civil society and dam-affected people's movements are concerned that China's poor record on protecting human rights and environment could mean trouble for African rivers now targeted for Chinese-built large dams. Africa is a growing source of raw materials for China's industrial sector as well as marketplace for Chinese goods. Chinese companies are heavily involved in many fields: oil, mining, logging, and infrastructure. Unlike Western financiers, China's assistance comes with almost no strings attached. And they go over some of these projects. There's the dam in Sudan. We're talking about an extra 174 I'm sorry, I was looking for the megawatts. Here it is, 360 megawatts. Zambia is going to add 660 megawatts, 750 megawatts, $600 million investment. Here's Ethiopia, the Tekizi hydroelectric dam, 300 megawatts. There's Mozambique, Nigeria, and $2.5 billion loan. Ghana, the Republic of Congo, Gabon. So you've got a lot of complaining here from the left. And it's not really the left. It's what I would call the world elitists, the people who have ceded over U.S. national parks to the UN as wildlife zones. Of course, these people don't care about the African people. They don't care that the African people will be tremendously benefited by rails, roads, dams, electricity, modern appliances and conveniences, because these people don't care about the African people. They view Africa as a gigantic park and a place where the elites can go and play and hunt and go and have their charities and observe the Africans in their native habitat, of course, because they don't really view these people as people. It's just ridiculous and absurd that the Chinese would be criticized for building infrastructure in Africa. And of course, if you look at the history of Africa, the United States in the recent Cold War era, basically the United States and the Soviet Union have been fighting proxy wars over Africa, and the United States or the Soviet Union would pay off dictators, or the UN as well, or the World Bank would loan tremendous amounts of money to corrupt dictators, or put corrupt dictators in power, or overthrow elected representatives that wanted to improve the lives of the people in Africa. But no, the United States and the Soviet Union were more interested in just having proxy wars in the continent of Africa and not doing anything to improve the lives of the African people. And as we can see here, China, with not too many strings attached, is building a tremendous amount of infrastructure in Africa using all the money that they've earned by manufacturing in their own country. So it's really kind of a pathetic thing to see someone like Hillary Clinton over in Africa touting the Coney story and things like that, trying to get the right to fly drones over Africa so that I guess we can spy on what the Chinese are building over there. Of course, for the last many decades, we could have been building infrastructure in Africa to actually help the African people rather than setting up puppet dictators who would loot the country's wealth and hide it in European and American banks. So that's what's going on in Africa as China is moving ahead, and I think China is doing all the right things. And I think that, yes, there are many abuses and there are problems. I'm not going to lessen those things, but I think overall, a building of roads, rails, dams, electric power, and infrastructure in Africa is going to tremendously benefit the African people in the long run. Now, here's a story from Nigeria first, and this is just one story that's talking about dam completion. This is the Mambilla hydropower plant, and you can see the vice president here, Vice President Namadi Sambo, at a meeting with the Presidential Committee on the Mambilla Power Project. Consultants on Monday, July 12th, instructed that the 2,600 megawatts Mambilla hydropower project located in Gembu, Taraba State be completed immediately. So it's not like the Chinese are invading Africa, and you can see here we have the Africa Development Bank, the Islamic Development Bank, and they're providing billions of dollars to try to build this infrastructure in Africa. So very important things going on in Africa, and China, of course, not being covered by the Western press. It seems that China is doing a slow checkmate here by buying the alliances of these countries, by building infrastructure, by partnering with the governments to actually improve the lives of the African people. And of course, the World Bank and the UN and the world government leftists and communists who use the environmentalism as a way of holding the advancement of Africa down are very upset at this, obviously. So big things going on over there, and of course we are treated to another story about this supposed slowdown in China and heaven forbid if China actually slows down to a 7% growth rate, they'll call that a crash. So back to the silver price, we're looking very closely at this rounding bottom here on the MACD. If we do get the move up on this bottom, you can see that we're actually oversold to match a point all the way back to the 2nd of August. And you can see the rally that we had here when we weren't nearly as oversold. We actually rallied from about 28 all the way up to 31.25. So it's quite possible that we could get another rally here that would take us another $3 or $4. We could easily run through 32 up to 34, even up to 36 with the next run here, if this is a continuation of that bull move. And we'll talk to you next time.